So I'll tell you what, I had a few people already, on the show that talked about their handicapped, making, I don't know, perfect eagle. I'm not a golfer, so I'm not really sure what are the different terms. How
so
are you like?
You're good with me because I don't have a lot of birdies, eagles, or those important things. I play because I enjoy it and have some good friends that do it as well. So I'm fine just talking generally about golf.
So are you good? What are we talking about? Just doing 18 holes with friends?
I am very average, but play a lot and always trying to get better. So I kind of have a group of friends we play frequently. There's a few different clubs in the New Jersey area, so I'll try to get out and visit and play. And it kind of gets my mind off of insurance and more into trying to get better and continue to improve. So it's good pastime, especially when the weather's great.
And you've been in Verisk for almost 30 years, right? How did you end up at Verisk and in the insurance vertical?
So upon graduation from college, I worked with Prudential Insurance Company. So I was here and around New Jersey and Newark to be exact. And after a few years with Prudential, I got a call from a company called Insurance Services Office. Insurance Services Office was the predecessor organization of Verisk. And they were at the time looking to kind of upgrade and put in some financial systems, do some financial reporting. It was more on the financial side of things. And it just seemed like an interesting company, very dynamic, an interesting place in the insurance industry, P&C, and made the switch to Verisk, as you said, almost 30 years ago. And it's been a fun ride.
And we're going to use that number again, over and over again, because, we are recording this at the end of August, and it's just the week of anniversary for the Katrina hurricane and 30 years for Andrew. That was really also catastrophic for a few insurance companies, but we'll touch about that later. But for now, we still want to talk about you. So what do you do nowadays for Verisk?
So inside of Verisk, we are kind of known for the analytics and the data that we have. And what we're helping do is trying to make sure we power and help our insurance customers. The things we do in insurance is really across the insurance value chain. So whether it's around underwriting, it's the way we price products. So think about the loss costs or the cost of goods sold inside of insurance. We do that across all the regions and about 31 lines of insurance. And we have a lot of information about the properties you insure, the people you insure. That's the underwriting side of it. We work on the claim side in the world of fighting fraud. So claim search really represents all the industry claims so that you can pay meritorious claims quickly. If there's a challenge or problem with some of the parties involved, we try to highlight that to insurers. And we also are involved with, you may have heard of Xactware, but Xactware provides the solution that is for repair cost estimating for properties. So if there's some damage, we're working with policyholders, the adjuster, and the claims departments to figure out the proper cost of repairing the property. We are in the insurance industry of in the UK, primarily in the Lloyd's London market. We do things in the SQL suite, that's policy admin and software that helps power the back offices of insurance companies. And then probably what we'll spend most of our time in today is with our extreme event solutions. That's the Touchstone, or formerly AIR, suite of products. And it's CAT modeling, and it's about extreme event modeling. And that really ties back nicely to Andrew and what has happened from a catastrophe perspective, and hurricanes in particular.
So you already answered my follow-up question. It's okay, so what is Verisk, and can you give us a little bit of introduction about, because it's a big company, so Verisk Analytics, then you have other verticals. And it's not only insurance, you're also servicing supply chain, energy, etc. Is there like cross-pollination there, or what is Verisk, if you don't mind giving like the overall of the entire group?
Sure. So I think what we specialize in is we try to help our customers make better decisions about risks in their assets. We do things in primarily two verticals. Energy, which is where we aggregate information about underground assets. We do some things in energy transition. But if you're trying to understand the value of underground asset, well, or reserve, we have all the information that helps you understand what it's going to cost to extract it, explore it, and to the extent that you think about investing in it, what the value of that asset is. That represents about 20% of our business. The other 80 is about insurance. And when you think about insurance, it's across the insurance value chain, from underwriting to claims. We do things with insurers and reinsurers around catastrophes and extreme events. And we do things in the London market as it relates to software and policy admin and back office. So across government, across insurers, reinsurers, and of course, oil and gas, those are our primary customer sets.
Okay, I have a question that will be later on, but let's jump to it. You talked about governance, you talked about energy. Now the ESG is a hot topic. Can you tell us a little bit more about how are you involved in ESG, part of, setting up the policy? Because one of the things that really surprised me was, I think that it was someone from Swiss Re 2 years ago already started to jump and talked about how insurance is actually leading the way from ESG standpoint to set up a economic policy for their insureds, etc. Are you guys involved in any way?
So we are. Yeah. Let me just maybe describe to you the couple things that we do from the ESG perspective, and probably we're more on the S. But what we have is catastrophe models, and those catastrophe models have been modified and adjusted for climate change. So we're on and about climate change, and we can help understand and help you understand about your supply chain, the effects of climate and what's going to happen into the future. Everyone's kind of pointing out to monitoring, tracking, and goals, usually 20 to 30 years out. So we have a view as to a little bit about how climate's going to factor into that. B, we have a lot of information about big commercial buildings and commercial properties, and understanding consumption, carbon footprint, something we're involved with. And then probably where we're most involved with insurers is really around social indices. So as you think about different geographies where you're concerned about social injustice, where you're concerned about political risk, where you're concerned about the demographics and what's happening in those regions, those are some of the things that we've done from an ESG perspective and have used it with insurers who are in some cases using it with their policyholders. So that's how we interact and certainly get involved with the ESG discussion from an insurance perspective.
You more or less joined Verisk the year of Andrew. That was a big thing, right? I think that it destroyed about 15 or 16 insurance companies. What can you tell us about that dramatic and how you guys work on catastrophe modeling?
Yeah, absolutely. So inside of our Touchstone platform, the thing I usually like to say is that if you were to look back at the time of Andrew, it was probably about a $15 billion type of event. And after it occurred, 12 insurance companies were insolvent. They went out of business as a result of those claims. And if you now fast forward, and obviously the numbers have gotten dramatically bigger. So if you think about 2011, I think we incurred about $145 billion of insured losses. 2017, $150 billion worth of insured losses. And in 17, there was one insolvency, seven, and then three in the other period, and you realize that because of catastrophe models, insurers and reinsurers are better prepared for these risk events. They understand and they've been able to quantify just how big of an impact it has on their book of business. And I think analytics, catastrophe models have come a long way. They've gotten a lot more accurate, but at the same time, it has become a way of providing risk management. And it's also become almost like a lingua franca between the insurer and reinsurer. It allows two different companies to understand a book of business and kind of converge on value of risks and being able to better place reinsurance. So it's pretty dramatic. And I do believe my example of insolvencies is an example of really how the industry is so much better off today and so much more prepared today than it ever was.
Can you share some sort of a story or example about, no need to name names, about companies that became insolvent because they're not adopting new models or not adopting any models back in the day?
I'm not sure I want to get into specific companies that ultimately kind of met their demise. But it's the example of let's use the typical American. I mean, what we have found is that America loves to take their most prized assets and put them in the most risk-prone areas. So you have a series of homes, very elaborate, very expensive homes on the coast of Florida, right? So with that and with that growing exposure, there's an opportunity for insurers to grow by just writing in Florida, right, as an example. And with that growth comes exposure and risk. And I think today, relative to, back in 92, people can understand what the likelihood of that event is. Some hurricane coming up the coast, what the impact could be on their book, their quote unquote 1 in 100 year event. And they use both underwriting guidelines and reinsurance in a much more common and effective way. And of course, what has also happened is not even just traditional reinsurance, things like cat bonds and insurance-linked transactions have come to play. So people can take risks and be very selective about what remains on their books and how much risk they want to absorb. And not only are they knowledgeable, they are also, I think, much more effective in ceding that business, or at least not exposing them to these extreme events.
Have you seen that how it actually impacts the product that the insurance company provides? So I'm just thinking about, we've seen these catastrophes and you go like, why the hell would I want to insure in Florida? I know that this year there are going to be a storm. There is going to be a loss. So outside of specialty products, how do you work with, your basic homeowners, admitted products that they have in Florida?
Mm-hmm. So we do a couple different things at Verisk, and it's true throughout the industry. We're trying to support their decision-making. So inside of the coverage, right, we do things around, the HO3 policy versus the HO4 versus HO5, those policies. That language is us, and what's covered and what's not covered is very important as you think about what you're underwriting. Two, what type of risk attributes and property characteristics are available in that house. So it's important to understand whether there's a pool, whether, as an example, it's 2 floors or 1 floor. As I think about kind of where you are, distance to coast is important. As you think about fire protection, even though there's a local fire department, is that the fire department that's going to service you? Is the hydrant outside, your neighbor's house, sufficient water flow that they can actually pump enough water to put out a fire at your house? Those are the type of things that we do, helping both price the risk and also understanding those property attributes so that you appreciate the risk that you're undertaking. So that's at the risk level. And then, as I described earlier, you then start to worry about the portfolio and how much additional risk can I take on in light of how much I've already written in Florida. Do I want to write any more on the coast? When do I have a guideline that says shut me off? So all of those workflows, all of that information and data, all those analytics are the type of things we help insurers understand about, what I'll refer to as Florida as an example, but that's across, the United States and even internationally.
So how do you keep yourself up to date, right? Verisk is, I would say, the incumbent of data and risk assessment and risk provider and data provider. We've seen more and more startups jumping into the space on different niche things, from data enrichment about commercial restaurants, commercial policies, to all kinds of other things. How's your innovation? How do you keep yourself, up to date and relevant?
Yeah, I think that's a great question. So I think there's two avenues to be current. One, I think what we're always trying to do is make sure we're up to date on current methods and models and making sure that we have the latest technology from the standpoint of, are we using everything we can inside of our models, inside of our analytics, and of course, making sure it's easy, crystal clear for regulators so that they can get approved and insurers can use them. The other thing that I think that we're noticing is that, the access and velocity of information is just dramatically improving and getting more and more constant. So think about it from the standpoint of, we're getting information on a daily basis for the insurers that are our customers. So we're blessed with this information, and what we're able to do is aggregate it, pool it, and provide it back so our customers have better access. But at the same time, satellite imagery, aerial imagery, I think that's becoming more and more important to the industry. So think about aerial imagery where literally like a pixel is down to a couple inches. So you can, as I kind of described, you don't just see the pool, you can almost see the waves in the pool. So are there new buildings? Is there a diving board? Is there a pool? Is there a trampoline? Those things that, bring on risk. Or we also, gather information about fire protection. So, what are the fire protection in a building? Are the sprinkler systems up to date? Is the fire protection up to date? What's the quality of that fire department? All of those things go into making the community more resilient during major storms or catastrophes, but also makes the properties in those communities, less risky for insurers. And that's the type of information we're looking to constantly gather so that we can give better insights into not only the buildings, but the occupants in those buildings, right? I mean, if you're Verisk and you have a couple of computers in a building, it's probably one thing. At the same time, if I'm building some fireworks around the 4th of July, I'm much more concerned about that property and the properties surrounding it. So the occupants and the construction and the protection, all those things, as well as where it's located relative to severe storm areas, is hugely important in the exposure.
So when you're talking about geospatial analytics, I'm thinking about, for example, a BetterView. Part of how they grew there. And there are several startups in the space. And, for this podcast, I think that the main audience would be startups, investors, and carriers, and others, and then other service providers in the industry. Because, hey, let's face it, insurance, it's a very big industry that employs millions of people around the world. Are you partnering up with insurtechs? Is there an investment arm that you do, or what's the relationship there?
Yeah, so that's a great question. So I think what we do, we try to partner up. In some cases, it takes the form of investment if it's something that can, help us, or we can help them. I think the most common way you see us interacting, though, is we'll use claims as an example. You mentioned a few companies there. We have a platform that's referred to as Xactware or Xactimates, and we do all that repair cost estimating. So if there's a good way that a customer can gather some information, whether it's around measurements or whether it's around a certain type of risk, understanding the shingle, maybe understanding the carpeting inside of that repair. We have about 100 different partnerships, and that information becomes a part of the assignment and basically the repair cost estimate. So we, kind of on behalf of our insurance customers, are, reaching out to those insurtechs to gather that information for them. They're buying it directly, and it's a part of the network effect that's hopefully creating a more automated ecosystem for insurance. And I think on the claim side, we can be ever more automated, and I think the whole industry is heading in that direction. But that claims example I just provided is probably the one that's most relevant.
I love that you brought that keyword up, ecosystem, because I've been noticing a lot of companies trying to build their ecosystem. And if we are dealing with risk, Guidewire acquired the Hazard Hub a year or 2 years ago. They were based in San Diego. And it's very interesting to see core systems that trying to build their ecosystem. And then, of course, you as a risk analytics provider and data gathering that trying to have your ecosystem and other. The question is, how do you build the DNA of the company to manage that ecosystem? And I don't know if that's part of your day-to-day, and maybe you cannot say. How do you build a live or a vivid ecosystem that will serve your customers?
Yeah, so that's a great question. So let me just make my point that I usually make. If I was to look back and I was to use the Hurricane Andrew event of 1990, and I wanted to buy Microsoft stock back then, I'm going to call my broker, right? My broker is going to call the desk, the trading desk. And what ultimately is going to happen is I'm going to buy some stock, and there's going to be some pink sheets of paper on the floor, and it's going to be poorly executed. I'm going to get a bad price. And it may have cost me like $35, $50 for that, right? And think about today to buy Microsoft stock. It's great execution. It's sometimes free, and it happens instantaneous. Money's changing hands. That example, when applied to insurance, is, I think, a little bit of a telling sign for the future. I mean, it's going to have to be more standard coverages, and it's starting to happen in auto. But I really believe that the insurance industry needs to operate as if it's this big trading platform, and it happens in such a way that it's almost automated for more standard and basic coverage. So to answer your question, what we're trying to do is be a part of that ecosystem, facilitate, enhance that ecosystem. We're trying to put our two products together in such a way that they interconnect. But more importantly, we're trying to make sure that they interconnect with other third parties and interconnect with internal solutions that insurers have. And that's typically through microservices, that's through a series of APIs. It really represents the way technology can connect together, and we have the ability to interact with others at the whim and at the request of our customers. So if an insurer wants it, they should get that and be served that information in a way that's easiest for them to use. And I think most vendors, as well as most insurers, interacting with brokers, interacting with agents, are going to walk down that path. And it's going to be coming together. Probably should be happening quicker than it is, but that's just my vision for the next 10 years.
Okay, so before we start to wrap it up, because I can't believe we are already at the 25, 26 minute in, I'll try to go back to what I started to ask you, which was, okay, insurance, we talk about the brokers, ecosystem, all that stuff. You provide catastrophe modeling, you provide information for commercial buildings. What is the granularity of data that you provide? Are you serving for simple homeowners, rent, auto, or is that only the big picture? Infrastructure, or, hey, you should not, insure Toyotas. I'm just throwing names.
Yeah, no, that's a great question. So We are involved in risk decisions at the individual or property level. So if you were wanting to understand about a home, we know the number of stories. We know a lot about your home with basically 2 bits of information. Give me, an address, and we can get at it. If you wanted to know about a person with their approval or opt-in, give us your name and address. And we can pull together the cars you have, the accidents you've been in, moving violations you have been a part of, a little bit about your financial history, all those things that go into an underwriting decision on the personal line side, whether it's about the car and auto or about the home, all of that we can kind of pre-populate and provide analytics around what that risk could be going forward. At the property level, whether it's the home or the building, as I described, we've probably been in the most major buildings. We know about the construction, the occupancy, the protection, the sprinkler systems, the protection around it. So I think what we'd like to say is we can give you very granular information about the individual with opt-in, as well as about the property or the auto, what we refer to as the asset. And once you underwrite that risk, we have great visibility and granularity into if there's a claim on that, whether the individual, meaning the claimant, or the third parties involved, the lawyers, the doctors, the person repairing the roof, is a part of some scheme or something you'd want to look more deeply into because we have the industry experience around those type claims, make sure it's not submitted twice, making sure that individual is not a part of some ring that has been involved with things that you should look more deeply into. So I think the data from Verisk is, yes, very granular, very detailed. But at the same time, the models that we have can aggregate it up to a level around CAT models so we can look at your portfolio and understand the risk of the portfolio and understand the probable maximum loss or what's going to happen to you on your next risk as it relates to Florida, back to what we were talking about earlier.
Can you talk about what's, not broken, but what can be better and what next for Verisk and the products or the services that you're providing the industry?
So thank you for that. I mean, I can tell you the things that we're most interested in are the things that we hear back from our customers. So one, it's really about better decisioning. So when we talk about better decisioning, it's more data, more analytics, more segmentation. To win, you need to price at the right segmented level at a great level of detail. If it's about claims, it's about fighting fraud and understanding fraud. So better decisioning is one way we're continuing to push. Two, it's really around digital engagement. We think that the insurance buyer or those policyholders submitting a claim are very open to being interacted, being a part of that decision, walking around with their phones and being a part of how much it's going to cost me or what the claim is going to be and get this done immediately. They want instant gratification. They want to have a quote instantaneous. So gathering information at the point of quote, so it can be quickly quoted and accurately quoted, being a part of that survey, being a part of that inspection if it's a claim. Digital engagement is our second very big priority. And third, it's really about automation. The industry is looking to save costs. So inside of my interconnected ecosystem, a lot of the reason that people are pushing in that direction from an insurer perspective is they really think it can be more effective and more efficient, meaning it could save them money by doing so. And that interconnected ecosystem, bringing everything together, I think is a way for the industry to be less costly as a whole, less frictional cost. So that's our third. Fourth, probably more of a Verisk thing, we would like to do more of what we do here in the United States outside of the United States. So Europe is our focus right now, but we are trying to move beyond the U.S. in a very kind of focused way. So that's those are the four things that I think about when you ask about growth and what's next for us.
Are we going to see you at ITC or DIA?
I will be at ITC. I think I am going to be on stage on day one, early in the morning. So I hope to see you there.
Now, day one today, is that Monday or Tuesday? Now, I'm not part of the organizers anymore, so I'm a media partner with them. So it's all about, I think that Rocio is the one that's responsible for the agenda. So which day is day one? Tuesday?
So
Monday?
I think so I think Tuesday they kind of open up, and then the opening events, and then Wednesday's the event that kind of formally starts. It's kind of a Wednesday, Thursday. I hope I'm right. You're asking me a question I should probably know. Sorry about that.
No worries. I hope that this episode will be before ITC. We are we are recording this at the end of August, and ITC is coming up very, very fast at the end of actually third week of September, because at the end of September we have DIA, not Amsterdam, DIA Munich, and that's going to be, so whoever is going to be there, that's going to be a quick jump and just take a shower and head to Munich. It's going to be very, very fast. There isn't too many conferences, but the difference is that DIA Munich, it's Oktoberfest, so they couldn't really move or play with the date. Okay, wonderful. Now that we sidetrack to other things which can be a little fun, the last question that I'm asking everyone, can you give us a recommendation? It can be about a book, a show, a life hack, some sort of a golfer pro tip, whatever that may be.
So I thought with the theme that we had here, as we started out with Hurricane Andrew, I enjoyed the book by Al Roker called Storm of the Century. It's a 1900 Galveston, Texas event that was, very, very significant at the time. And I enjoyed the book. I will give that as my recommendation as we part.
Fantastic. Mark, thank you very, very much for joining me today. It was a pleasure having you on the show.
Super. Thank you very much. I enjoyed myself. Good day.